Funding for Market Journal is provided by the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Jeff Peterson looks at selling strategies for corn and soybeans. Eric Thompson describes the possible economic outlook for Nebraska. Aaron Berger discusses management options for cow-calf producers, and Loren Giesler talks about using seed treatments in soybeans. Jeff Peterson from Heartland Farm Partners is our corn and soybean market analyst this week. The futures price for March soybeans closed January at $10.25 per bushel. After operating in a 50-cent range in February, the contract finished the month at $10.25 per bushel. March corn, meanwhile, rallied 7 cents on Tuesday, its biggest move in 4 weeks, and followed the performance by adding 9 cents Wednesday. The active movement earlier in the week could have been impacted by reported changes to the point of obligation in the Renewable Fuel Standard. We talked with Jeff Thursday morning and started by asking why that was so important to ethanol and biodiesel, and therefore corn and soybean markets.
You know, I think there was really 3 points, Jeff. One, the market was in the right place. The market had pulled back and we were looking for a bounce and looking for some news. But then on top of that, there was really kind of 2 main pieces to it. The first of all, as soon as everybody heard E15, I think everybody started thinking, oh, we're going to produce a bunch more ethanol. And we both know that that isn't the case. Really what they were just talking about is giving us a summer waiver, which would open up some more potential sales on the E15 side. We've heard that if that did go through, could mean a couple 100 million more bushels of corn used. So will completely change the market? No. The other side of it came from the bean oil side, and that was the talk about getting this producer credit, tax credit back in place for those biodiesel producers. And that really gave the soybean oil a bounce because it looked at that and said, well, you know what, we're going to take away a little bit of demand there from Argentina and also from Canada. So those 3 things came together and gave us a nice bounce, and it was good to see that we could do that.
Last week, the USDA projected acres for 2017, 90 million in corn, and then scaling way up in soybeans to 88. What are your thoughts on that?
Yeah, that's interesting. So we brought corn down about 4 million acres from last year. What was interesting, that was about 1 million less than what the trade was actually expecting. We think there will be a reduction on the corn, but our research would probably say not quite that strong. We think if there could be a surprise, actually, maybe corn won't be quite as low. It will still be down, maybe down, about 3 million acres. Over on the bean side, that's actually up 4.6 million. The other thing was that was 420,000 acres above what the trade was expecting. So that put a little pressure on the market. We could actually buy that number on beans, but like I said, if there would be a surprise, it probably could be that we see maybe a few less beans and maybe a little bit more corn. Overall, the thing the market's kind of questioning is that when you bring corn, beans, and wheat together, that's about 224 million. That's down 3.6 million acres from last year planted. So everybody's kind of questioning where those acres are going. So we'll have to see as time goes forward.
The agency next week will release its supply and demand numbers. Do you expect any major changes?
I think there is a couple changes that are probably coming. I think we could see Argentina maybe bumped a little bit. It seems like the production down there maybe isn't quite as bad as it was, but for sure we'll see some increasing coming out of Brazil. They're making good progress on their harvest. If you take a look at Mato Grosso, they're about 66% harvested. And on the small side down there, you've got Rio Grande do Sul, about 13%. Right behind those combines are the planters. That safrinha crop in Mato Grosso is about 79% planted. So they're making some good progress down there.
If you look at the potential for summer, we talked about this last week on the show, the potential for El Nino is something you're also starting to watch. Why is it noteworthy?
Yeah, it's noteworthy for a few reasons. First of all, it's that time of year, Jeff. We're getting to know more about it, what's going on out there. There's more known on the acre side, so naturally it's closer and it's time to spend more time talking about what's the weather going to do. You know, El Nino for really most of the major producing areas in the U.S. would actually be pretty positive, but it still could give us some surprises. Surprises in Australia, also some surprises in Northeast China. So that's why we're looking at that right now, just to make sure there isn't going to be any major surprises out there that we aren't anticipating.
We're through February in the price discovery period, $3.96 for corn, $10.19 for soybeans. How do you think producers can use this in their marketing plans?
Yeah, it's that perfect time of the year to really get those marketing plans out, get them all in place, go through, work up their break-even numbers, know where they're at. And I would say for most guys, when they look at the crop insurance revenue protection that they've got, you know what, that's not going to cover all their costs. So that means they're going to need to make some additional sales to protect themselves. We say take a look at your APH, take it time your insured amount of bushels, identify that as a level that you're willing to get sold up to, you know, prior to harvest time if we see the prices that we like. That's how we're wanting to use those numbers.
Update me on your sold positions.
Yeah, right now we're coming in and it's going to seem a little interesting when I say this, Jeff, is that, you know, we're getting fairly heavily sold on old crop beans just because we think this bounce that the market's given us has been kind of a gift. We've only got about 10% left. New crop wise, we've got about 40% sold right now of new crop. On the corn side, we've only got 10% sold on new crop. We think there's going to be some better prices down the road yet. We think there'll be some weather items and some issues with acres. And we've got about 30% left on the old crop side. The best advice I'd say right now is, you know what, let's be a seller on some bounces. Let's continue to sell these. We know this is the time of year that the market's going to give us some opportunities to get some good sales on the books.
This was a selling opportunity this week for beans and corn, then, you think?
I think it is. I think we want to continue to look at that. I think on the bean side, if you can get beans up just, you know, in the 10, 15 cents from there, go ahead and make some more incremental sales. I think what we'll be doing here is, even though we don't have all of our new crop beans sold yet, we'll be coming back in and buying some puts back against those unsold bushels, because the other factor we have to think about right now, we don't know what can happen from the policy side. And could there be some unintentional consequences that happens with some of our major trading partners? So I'd say overall that gets us in a position where we just don't want to quite take as much risk this year as we would in probably other years.
Next week, Mike Briggs will join us to look at cattle markets. The Nebraska Legislature's Economic Forecasting Advisory Board this week lowered its revenue projection nearly $153 million. The revision would put the state almost $288 million short of its minimum reserve. The University of Nebraska-Lincoln's Bureau of Business Research, or BBR, said recently it does see improvement in the state's economy towards the middle of the year. The BBR's leading economic indicator aims to predict conditions 6 months into the future and saw what its authors call a sharp rise in its latest edition. Eric Thompson is the director of UNL's BBR. He joined us Wednesday to explain how the indicator attempts to forecast growth.
Well, our leading indicator is comprised of 6 components, each of which individually predicts future economic growth about 6 months in the future, and then also together does that. So we have manufacturing hours, we have building permits for single-family homes, we have airplane passengers in Nebraska, we have initial claims for unemployment insurance, we have the value of the U.S. dollar, and we have a survey of 500 Nebraska businesses that we do every month.
So just a bit further on that, how much of that is emotion-based, so the survey, versus hard data, the unemployment claims?
So the survey would typically account for about 10% of the indicator. So it's primarily based on hard data about the economy. It's all information that's available really quickly, so it's always pretty current. But we like to combine that hard data part of it with the opinions in the survey. Those opinions about sales and employment over the next 6 months are a really strong leading indicator for the economy. You definitely see businesses' expectations swing as the economy changes.
So what does the indicator show in the latest month?
Well, in the latest month, it was up very strongly. So almost a 2% increase. That's in our rapid increase zone. in terms of the increase. So it suggests that Nebraska's economy will be growing quite rapidly in 6 months. So it's designed to predict 6 months in the future. So by the summer, our economic growth should turn from sort of slow and steady to strong.
One of the reasons I found that interesting was because if you look at agriculture, I don't know that there's a ton of positivity out there right now. Can you explain how much agriculture generally contributes to Nebraska's economy and how it's factored in with this?
Well, measurements I've worked on suggest that about 1/4 of the Nebraska economy is tied to agriculture. Some of that is, of course, farmers and ranchers, but also the businesses that supply agriculture, the businesses that process crops and livestock, and then other people that benefit from ag due to the multiplier effect. So it's about 1/4 of our economy, clearly the largest individual sector in our state's economy.
You also have a coincident economic indicator. How does agriculture play into both of these predictors?
Well, the leading indicator, about 1/3 of the leading indicator is due to the value of the US dollar, because that's so critical to Nebraska agriculture in influencing prices and also manufacturers in Nebraska. So it enters the leading indicator in that way. For the coincident indicator, we actually have the price of corn and beef as our two largest agricultural commodities. And that accounts for about 20% of our coincident economic indicator index.
Can you explain more on how the strength of the dollar is maybe impacting the economy, agriculture overall?
Sure. So there tends to be an inverse relationship between the value of the US dollar and the price of commodities. So one of the factors 4 or 5 years ago that was contributing to the high prices for agricultural commodities is we had a pretty weak US dollar then. Especially in the last year, it's strengthened quite a bit, and that's put some additional downward pressure on ag commodity prices. I think producers were expecting those prices to moderate from the high levels they were at 3 or 4 years ago, but with the rapidly rising US dollar, the fall in prices has been a little steeper than I think people were hoping for.
Based on the last few months of your indicator, how do you see the economy playing out to summer?
Well, again, I think the Nebraska economy in the summer will shift from solid, steady growth to rapid growth. So we should have some good news for our state's economy and hopefully a stabilization in the ag sector as well.
Eric says the leading economic indicator tracks a 91% correlation to predicted versus actual growth. You can find more on the latest indicator on the Bureau of Business Research's website at bbr.unl.edu. The March Nebraska Farmer says entrepreneurship is alive and well in Nebraska. This month's magazine features Ryan Stauffer and AJ Stauffer, no relation, of Seward, Nebraska. The issue says the two are quickly outgrowing the building they've used to make their patented invention. The Lev Rack is a movable shelf unit hung on a pallet rack, allowing shelves to slide back and forth to fit more items. It recently won the People's Choice Award in the American Farm Bureau's Rural Entrepreneurship Challenge. You can read more about the Lev Rack and how the concept was born in the March Nebraska Farmer. The USDA expects cash receipts from the sale of cattle and calves will fall in 2017 to their lowest level since 2011. The mark of $63 billion would be about 7% below last year and nearly 23% lower than the latest high in 2014. With that forecast in mind, we recently talked with Nebraska Extension educator Berger about how producers can manage costs. We began by asking for an update on the current economic environment.
So as we look from a cow-calf perspective, we've really jumped some in terms of price from that October-November low we saw, which has really been encouraging. But from a cow-calf sector standpoint, obviously things are more challenging than they were certainly in 14 and 15. And thinking about many management options as we look to the next year, as I work with producers, really encouraging them to put together cash flow, look at their balance sheet, look at an income statement, see where they're at, see what they project things are going to be. And then let's start maybe thinking about what are some strategies management-wise to work through some prices that are going to be certainly less than we enjoyed in 14 and 15.
What things stand out, Aaron?
So big things that jump out to me from the start is really looking at feed costs, paying attention to where we're at there. We've seen some reduction in terms of commodity prices, and so that's helped us from a cow-calf standpoint in terms of feed prices, but paying attention to what's going on there, seeing what opportunities are available. I think also as we think about the cow-calf sector, really paying attention to overheads and labor, and those are just a real challenge from a cow-calf enterprise standpoint. As we think about labor overheads, we're really thinking about equipment and what we spend there, trying to think about how we might reduce those costs or obviously run more numbers to reduce our overhead costs per cow unit. And also I think as we think about what's going on in terms of mineral supplementation, looking at what are you providing in terms of what's in your feed and then what maybe do you need to purchase. Looking at the spring, thinking about bull cost, looking at bull cost per cow, thinking about realized reproductive rate. And when I say realized reproductive rate, I'm thinking about calves weaned per cow exposed. So we're looking at cows that were in the breeding pasture, looking at number of cows that were pregnant, looking at what our pregnancy rate was at the start of the calving season, and then looking at calf loss from the start of the calving season until we get those calves weaned. Paying attention to what's going on there, I really like to see those numbers in the mid to upper 80s. If we're not there, it's looking at why is that, where are some losses occurring, and can we do something strategically in terms of management to address that. As we also look at towards the breeding season, I think about ways to move late calving cows up. Cows that are on a decreasing plane of nutrition between calving and breeding are at a negative disadvantage, so we want to pay attention to that. Thinking about ways to move late calving cows up, and there's some good research done by Dr. Rick Funston looking at utilizing a seeder. 20 days after a cow has calved, we could put a seeder in, and for 7 days pull that seeder, give her a shot of prostaglandin, and then that can often jumpstart those cows and move them up. So really just thinking about a lot of little things that we can do. There's not real big things, but when we add those little things together, they can really have an impact as we think about improving profitability.
Can you talk more about how this current economic situation or environment differs from where we've been and how that might impact decision making?
Yeah, so as we think about just what's going on in terms of the marketplace, obviously fall of 2014, fall of 15, it was just a really good time to sell calves. We're looking at prices that are somewhere around half or a little more, a little less than that right now. I think we really want to be paying attention to the value of gain. So thinking about where calves are at in terms of their weight, thinking about if I'm going to grow these calves, what is my expected end weight and what do I get paid for those pounds that I put on? It's not just the price per pound, but it's what I get paid for those pounds is really important. And so thinking about your system, thinking of what opportunities you have, those are important as we evaluate options.
Are there other feed options that might be available due to prices?
So I think as we look right now in Nebraska, as we look at this spring, pasture rental rates are still pretty high compared to what they've been historically. There's still tremendous demand for pasture. As I look at all the people I visit with say pasture is hard to find. As we look at the value of ethanol co-products today and we look at some of the hay that's available, dry lotting cows, either as pairs or dry cows, is economically, in some cases, a very competitive option. Now, there's some management challenges that go with that. I think we've got some research and some things that can help us evaluate those, but those become competitive options in terms of current market conditions.
You can find more profit tips from Aaron on UNL's Beef website or through a link on the Market Journal homepage. Nebraska was the 5th largest soybean producing state in 2016, but its average yield of 61 bushels per acre was the best in the nation. In fact, 3 of the top 4 yielding counties in the country were from Nebraska, including Phelps, which tied Piatt County in Illinois for first with 71.3 bushels per acre. Hamilton was 3rd best, Dawson was 4th. As growers prepare for the 2017 season, this week we talked with Nebraska Extension plant pathologist Loren Giesler about the use of seed treatments. We started by asking why soybean diseases seem to have a randomness, as they don't necessarily have a pattern of appearance across the state.
Well, Jeff, I think, and this is really more relating to like our soil-borne seedling disease problems that we see. And really a lot of those are very specific to the field. So that's why we always talk about history and making sure you know what you've had in that field and identified it correctly, because they can vary so much with that, from Pythium to Phytophthora to Rhizoctonia to Fusarium diseases as well.
If we talk about using seed treatments, tell me what you can hope to get out of them. So in terms of how much control can you get versus how much yield can you lose?
I think the biggest thing is with a seed treatment, if you're using it in a field that has a stand problem and it's significant and you know the disease that's there, or if you don't know even, and you came in with a combination fungicide, you can protect those plants, but there's a couple big ifs. Okay, if conditions are favorable for your seedling disease to be a problem, you will definitely increase your stand at that point. How much is going to vary all over the board. I mean, and over the years I've probably seen, maybe even a 25% change in stand with a seed treatment fungicide, or maybe even more. The other thing is how that translates to yield. Mm-hmm. And we know that when we look at population studies and we plant from, studies that planted from 180 to maybe even 80,000, we might not see much different yield in those at all, okay? I would never recommend 80,000, by the way, okay? But the reality is that soybeans compensate. So we may get significant effects in stand, which when we looked at the soybean management field day studies, a lot of our locations had significant stand effects with that fungicide and the fungicide insecticide combinations. However, when we looked at yield, there was no significant effect. So it's not uncommon to see that, and particularly with seed treatments. So, that's why I guess I would always question the idea that, some say, well, I'm just going to use it for insurance. Well, if it's not paying, you don't really need it. Now, that said, there's a lot of growers out there that benefit from seed treatment fungicides, and that's one that if they've had any problems, I would sure recommend using them.
You mentioned the last time, if you were thinking about reducing planting populations, that might be a spot where seed treatments would be a wise idea. Explain why.
Well, the biggest thing there is that if, let's say you're a grower that was planting 150,000 or something, and you're going to go down to, 125 or whatever the number is. When you significantly reduce there, and then if you had a stand problem on top of that, then you're dropping your overall population. So if you were planting 150 and you were losing, 20% to whatever, and then you dropped and you lost 20, you could be to that point where you could see significant loss. Now that said, in our seed treatment studies, we typically will plant those in that 120, 125,000 range with the idea that if we're going to see a benefit of a seed treatment, it'll show up more consistently at lower populations. When we're at high, we don't see it as consistent.
Soybeans on soybeans, if anyone's doing that this year, are there any related disease problems?
Well, I think, when we look at seedling disease problems, not really. There's not anything there that I would say, oh, it's, consistency and you're going to have more problems. Really, soybeans on soybeans, we tend to think more of our foliar disease problems. So when we're looking at brown spot or if you had frog eye, much greater risk for those to be more of a problem in that situation.
All right, one last question. We talked about a year ago about some newer seed treatment options. Tell me, another year into the research, what you see from them.
Well, I think the thing that we've seen, and the newest one that has been out there would be on the sudden death syndrome front with the Levo from Berger. That product, it consistently performs well in fields with significant SDS. The question that we've had for growers on that is, how much do I have to get that return? So I think that's really an individual case. For sure, if you're a soybean farmer that has had a significant battle with SDS, I'd definitely look at using that treatment. If you're somebody that just has small pockets of SDS, I'd really watch that and just kind of monitor and make that decision, but use those resistant varieties or more tolerant, higher scored varieties for SDS in those fields first. And then as you continue to see that area expand, have more problems with SDS, then go in to look at that seed treatment.
Now with this week's weather forecast, here's Nebraska Extension and climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. Of course, during this last week, the major precipitation event came through the state on Tuesday. Really, all it did was give us some very, very light precipitation across portions of central and southern Nebraska. I was hard-pressed to find any location that even received 5/100ths of an inch of moisture. Most locations were reporting drizzle. But as that system passed to the east of us, it started to really get into some of that Gulf moisture cranking up ahead of it. And we really seen this system explode over the central and eastern Corn Belt. In fact, we had some tornadic outbreaks in Illinois, and we had blizzard-like conditions over Michigan and northern Wisconsin. Overall, though, as that system passed, we got some high winds with it, of course, as that system wound up over the Great Lakes. And then we've seen an easing of winds and the temperature starting to slowly increase as we move through the end of the week. It looks to be a very nice weekend as we see the low pressures coming in the western United States, pushing that ridge into our region and pumping our temperatures up. So we're going to be well above normal once again this weekend. We'll be looking at temperatures consistently in the 60s to the 70s, and then we'll also see our lows move up in the 40s and the 50s. That'll be short-lived as we see another system pass through on Tuesday. So let's get to the upper air models, and what we'll notice is here's our ridging in place, southwest flow aloft, bringing warm air into our region. Most of the activity on the western United States, nothing much in our region. So we do have a surface low that will develop. It may just generate a few clouds, but there is no moisture for it to work on to generate precipitation. You'll see the major precipitation today up in the Pacific Northwest. Now as we go into tomorrow, that system makes us a little ways inland into the Great Basin region, moving the systems to the northeast, but once again, no moisture, few clouds. All of the heavier moisture still remains to the east of us, and that system starts to crank out moisture into the Intermountain region and start to move it toward Colorado. On Monday, that surface or the upper air low comes out into our region. We still have a surface low to our south, but it doesn't look like we'll get moisture into our region. It looks like it'll pass basically to the east of us. So we don't see anything over a quarter inch in our region. It isn't saying we won't see some scattered thunderstorms starting to develop Monday night into Tuesday as this trough passes to the east of us. But overall, it looks like most of the major precipitation remains to the east of us, and we get high pressure filtering in with slightly cooler conditions as the jet stream starts to take in more northwesterly flow. So here's your major precipitation event with this system as we go into Tuesday, and then we see this northwest flow. As the system lifts out, a series of systems will move in this northwest flow to our north, keeping the precipitation in our region. So here we have a low pressure going through into North Dakota, moving toward the southeast. Still not expecting any significant moisture as it remains over the Cascades region, and that system starts to exit out in the eastern United States. Then the high pressure starts to build in during the midweek period to late week, and we start to see our temperatures once again move back up to well above normal conditions as low pressure develops across Montana. That one once again moves toward the upper Great Lakes and gives a few scattered showers and snow in the Dakotas, and then we see a low developing on Friday to the south of us. As we take that farther out, from Thursday through the following Tuesday, we are looking at above normal conditions across the southeastern three-quarters of the state or of the United States, with below normal temperatures. Another series of storms comes into the Pacific Northwest. In terms of precipitation, the models still are hinting at moving along most of this moisture over the north of us as we see that dry slot from the southwest to the Central Plains still in place. However, there are signs that some of this models may actually pull this low a little bit farther south, and we'll see some of that moisture spreading across at least the northern half of the state with above normal conditions. So we'll keep an eye on things and see how things change as we go through the next week. But overall, this is a very dry period that we're looking at before we start to see a return to significant weather as we get into the mid-month period.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, the future health of Nebraska's economy, management options for cow-calf producers, and soybean seed treatments. As always, you can keep up with Market Journal during the week by following us on Twitter, Instagram, and Facebook. Next week, Mike Briggs will be our cattle market analyst, and Nebraska Extension's Rodrigo Worley will talk about cover crop termination. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.